everybody. Welcome to TraderMerlin Show. It is your Thursday edition, the tail end of the week, and a bullish one at that. Boy, what some great moves to the upside. For those that are asking, yes, I did close out all my puts. So I kind of felt it was going to be a real bullish day with all that bank earnings announcements and just good economic data. So dumped it. Took a loss on that one, unfortunately. A little bit frustrated with that one because I had some nice gains, but it is what it is. But I'm out of that one. And what that means is basically tomorrow will be a massive down day because I'm out of my puts. But the nature of the markets. All right, today's show, we talked on Monday with John Rowland. He was talking about natural gas and how he thought he sees more upside potential there. Today we saw some pretty nice moves in natural gas and crude oil. Well, we're going to talk a little bit about trading news. Ooh, we got trading commodity news. Our guest today joining us is none other than Mr. B-Dub Brandon Wendell. Brandon, good to have you back, my friend. How are you?
I'm doing great. Good to be back. Thanks for having me again.
It's been a while. How long? It's been a few months, man. I don't know why we haven't had you on very often, but I guess I don't know. I get tired of reaching out all the time. We should just schedule something where you're permanently on.
Yeah, well, you don't want to lower your ratings. You're starting to get people actually watching, and you wanted to keep it going with some good guests. So.
That's right. I've been doing it pretty much solo. No, not too many guests out there.
Oh man.
All right, look, we got a pretty big group with us today, so good to have everybody with us. Nice to see you guys. Brandon, before we get started, tell me about that picture in the background. I know the backstory, but I figure, let's give you a little press time on your wonderful bull and bear picture.
Yeah, basically, I was hired to do a mural, believe it or not, and I painted. That's been my background now is bull and bear. I call it Wall Street Struggle. That's the name of the piece. And I painted it on a wall at the Online Trading Academy office in Fort Lauderdale, Florida. And people loved it so much. There was such a response that I decided to make a canvas of it. So I painted it on a canvas, and now I do have it available. I have copies of it available. All you have to do is just message me and catch me on Twitter. It's probably the easiest thing. And I'm at TraderBDub on Twitter. So you can also get a hold of me through Merlin. He always knows how to get a hold of me. But I'm selling copies of it, framed or unframed. You can get it either way. About $111 unframed and $147 for framing.
$111.27. You got to get those deets. He thought about his pricing structure and he went $111. No, it looks cool. I love it, and I like how you have the bear the bull is all pissed off. That little scowl there is like. As you know, Brandon is quite the arts and craftsy guy. Him and his lady are always doing some kind of art project.
Yeah, we're not fixing flat tires.
Right. Well, yeah, you saw the Steve put in there. Your Crash Wendell is your new nickname. Of course, you guys follow him on Twitter. He's had quite a few road accidents. Not necessarily his fault or anything, but just
3 flat tires, 3 different vehicles in 5 days. It's just nuts. I don't know what's going on the road. I think my neighbors have it out for me. Maybe they're putting nails behind my tires or something. I don't know.
So
crazy.
Brandon is now, his next class will be taught on the side of the road, the 210. All right, let's talk about commodities. I know when you talked earlier, you were talking about some trades you had made today on natural gas and crude oil. Obviously, I can bring up real quick the charts for everybody just so you can see. Natural gas at one point today was phenomenal. It was just ripping to the upside. Came back, looks like a nice little shooting star now. That was a decent day. But crude oil continuing its drift upwards, up over 1.2% today, challenging those highs we established about 4 days ago at $82. Walk me through, I guess, what your trades were, what you were looking at, and how the news played a part in it.
Well, yeah, let me go ahead and share my screen with you if I can. Let me see if I can do this. Window. There it is. Start sharing. See if that works. And, somebody asked about the size. It is 16 inches by 24 inches.
So I see the YouTube channel.
Oh, am I on the wrong screen?
Yep, you're showing yourself. That's nice. We've got a loop inside of a loop. That's kind of cool.
Let me see. Hang on a second. Let's see if I can fix this. Switch screen. Desktop. See if that one works.
And there we go. Got it. Nice and clear.
Right, cool. So now you see my screen. Okay, I had the wrong one on. Sorry about that. Anyway, so basically what happens is I look for news, obviously, for this, and there's a lot of different news out there. The easiest one that I've found to use is forexfactory.com. It's free. It's pretty comprehensive. Gives you a lot of good info. And when you look in today's news, there was 2 items in particular that I was really looking for. And I was in my E-mini think tank, which is my live futures room that I do 3 days a week, Mondays, Wednesdays, and Thursdays. So today it worked out perfectly. As you can see, we had nat gas storage at 10:30 in the morning. So that inventory number is coming out. And then we had at 11 a.m. crude oil inventories. Normally that happens on a Wednesday, but because Monday was a holiday, they pushed it back to Thursday. So we got the double whammy today, which was perfect. So
Right.
if you know about these commodity news items, and if you don't know, obviously I can show you a little bit more about that. I'll do that here, but also in my E-mini think tank. But basically what happens is the news produces a knee-jerk reaction. And you can trade the knee-jerk reaction, but it's really a three-prong move. So let's say it's a positive announcement. You'll get a knee-jerk reaction up, followed by a correction back down, and then lastly, you get continuation of the overall trend. Now, if it's negative news, it does just the opposite. You'll get the knee-jerk reaction down, then you'll get a correction back up, and then you get continuation afterwards. So you can do this with pretty much any news release. I do it with non-farm payroll at the beginning of the month, but with the S&P or with the euro, believe it or not, it works pretty well. And yeah, like I said, it's almost always the same pattern. Knee-jerk reaction, correction and reaction, and then continuation. So what happens is the 15 minutes before the news is released, generally prices start to go a bit sideways. So what we did in the class today, let me remove some of this, is that I identified the basing area. As you can see, I've got it highlighted right here. Whoops, a little too wide there. Let's go. These three candles, which would be the 1015, 1020, and 1025 candle, they finished at 1030. So just before that happened, I highlight the high and the low. And what I'm looking for is basically trading the breakout, which is that knee-jerk reaction I was talking about.
Right.
So, hey, Pepe. So I see a couple people saying hi there in the chat. Anyway, so what I look for is a move typically up to supply or down to demand. Now, the average movement for both nat gas and crude oil is about 35 ticks on average. So it's not always going to be exactly that, but it's usually pretty close. So I try to strike out for these supply and demand zones, but I'm not always going to get them, obviously.
Right.
So I keep my finger on the trigger, if you will. I have my trade button here and just have it set for flatten if I need to get out quickly. So there's actually three possible trade opportunities here. As I mentioned before, let's just say it breaks to the upside. Okay, well, first of all, I don't know which way it's going to break because I'm not Merlin. I don't have a crystal ball.
Gee, you know I didn't know that.
Yeah, so I don't know which way it's actually going to break. So I play both ways. And, you know, for options, you'd be doing this as a spread. You buy a call, buy a put, you do a straddle. But here, what I'm going to do is simply put in a stop limit order on both sides of that basing. So I set up an order to buy if it breaks out above with a stop limit, because the last thing you want to do is chase price and catch it right before it reverses. And then the second trade is called the fade, where once it gets to the supply zone, since it's going to possibly come back down, I can go ahead and just simply sell at that supply. If it gets there, great. If it doesn't get there, I just don't get in. And then finally, once it returns back to the origin of the breakout, often you get the continuation of trend going a little bit longer time frame. So if we take a look at what happened today, we actually had two trades. Believe it or not, I got in a little early on this one because what happened, this is the danger. Sometimes you get put in a little early. So I had the range right about here, and then you see there's that wick that popped out. So that put me in on the short side of the market. So I had a bearish bias initially getting into the market before the news came out, which was not good because when the news came out, it actually caused price. Oops, let me go. One candle, come on, there you go. You can see it broke to the upside. So I got stopped out on my short, but immediately got in on the long side because I had that order all ready to go. Remember, I have two independent orders, stop limit for either direction. So what happened was I ended up catching the majority of this move. It did not get to supply, as you can see. So I hit the O, well, no, this is not cable. I hit the oh shit button. So
Yeah, you can say what you like here. It's good.
Yeah. As you can see, I've got the flatten right there. So I hit the flatten button as soon as I started to see the topping tail coming in, which meant that the momentum was dying off. So net, I was positive because I took a small loss and then a small win. So if I go into the positions here and look under nat gas, you can see, well, it doesn't break it down. Oh, it erased it already. Why did it erase it? That's weird. I had a picture of it earlier. Huh, strange. But net, I was up $700 something because I took a small loss of about $300 on the move down initially that got put in, but then I made $1,000 plus on the move back to the upside when it actually took the long right here. We never actually got to the supply zone, so I never got the fade trade, but I was ready for it. As you can see, it did fade. Prices came back down right there to the origin of the breakout. So if I wanted to now, looking at this, this becomes a little bit of a zone in itself. where you have kind of drop, base, and rally. So if you wanted to go long there, if the trend is likely to continue. Now, the news was on nat gas right here, we had less inventory than expected. So if there's less supply, you would expect demand to be higher, and therefore prices should go up. Well, going back to the price action, doesn't want to scroll. You can see it didn't care today. Often, though, you'll get that continuation of the move back in that same trend direction. So I ended up only taking the one move today, which was that move to the upside. I'm trying to see if I can find it. Anyway, I put it in my Twitter. So if you go to my Twitter, you'll actually see that I actually did do that today. I posted a picture of, I'm not going to find it right this moment. That's okay.
You know, how do you balance the expectations of news out? So, for example, you had your economic calendar up there, and the previous was 118 billion. The expectations were we're going to go to 97 billion, which would be a decline in supply. We came out at 81 billion. So you're talking like literally over a 20% decline in inventories of natural gas for the week. Now, granted, these things are wildly volatile, but you have a decline of 20% in supply, demand remaining constant. You would think that price would be moving up. So how do you disconnect yourself from those expectations? Because with those numbers, you would think that natural gas would have rallied strongly today because of decreased supply and higher demand.
Yeah, honestly, I don't care.
That's cool. That's what I wanted to hear.
The thing I do is actually check the news, and you can see not only did it not care, it went completely down instead of continuing to the upside today. So I honestly do not care which way the news moves as long as it gives a nice move for me. And what obviously I didn't follow through with this because I ended up having the 11 o'clock crude oil news to follow up on.
Right.
So I had another opportunity immediately after this today. Normally I have Wednesday crude oil, Thursday nat gas, but again I don't normally have both on the same day. This was the Twitter picture of it anyway, by the way. There is nat gas. You can see net profit and loss for the day was a 760 profit. I took a small loss on some soybeans as well. And then the crude oil I'll show you as well we took. But I don't worry about, the news interpretation should have been, we were expecting a bigger supply,
right,
and we didn't have it. So prices should be going up. And here it is. You're looking in the face and it's going down. So I don't care what the fundamental reason is behind it or where it believes the markets are going to go. I only care what price is telling me. And that's really what it comes down to is what is price telling me to do and how do I take advantage of that? And when it comes to the short term, even when we go, this is looking at an hourly time frame. I was trying to go a little bit bigger picture. Actually, if I'm on a 5 minute, 30 minutes, my bigger picture for my trend. And what was happening, clear this. There we go. As that news came out and we got that big move to the upside, we didn't really get enough reaction to it as far as momentum. You can see that the momentum, I'm using the RSI as momentum indicator for myself. You can use other things as well, but we did get a little bit more momentum than we had before, but not a big spike that was likely to sustain itself. And that was probably one clue. I mean, just looking at price itself, that topping tail is huge selling pressure. The fact that we couldn't close at those highs, I don't know if we ended up hitting any kind of supply zones. Kind of. Actually, we did right here, didn't we?
On NG.
If I go ahead and put that in. And remember, price trumps everything else. It doesn't matter. I don't know. It's actually a little shy of that zone, isn't it?
Just a little, it's a bit. So there really was no logical supply zone which caused that trend, which is fine. Doesn't always happen. Right,
and that's the thing. As soon as price started failing and went below 40, I knew there was no chance of it going back up anyway. Now we're into bearish territory here on my trend time frame. It's just probably going to continue to move down, at least maybe settling a little bit at this area of demand right here. So I don't care what the news is. A lot of times I'll even forget to take a look at the news. So my students will say, hey, what was the news? I don't know. I don't care.
Yeah.
I'm just playing the pure price action.
Yeah, it's nice to look at it. And I asked that question kind of as a baited question because I know you well enough. And most newer traders, they will look at news like that and go, man, this news is really good. It should be ripping to the upside. So what they'll do is it'll start to go against them, and then they go, I know it's going to go up because man, there's only 80 billion versus expectations of 97. Holy cow, it's got to go up. And they double down or triple down. And I say that because I know Brandon is not that type of trader. He's like, all right, if I'll take a loss, I'll get out, and he has no problem taking a loss. But I said that for the benefit of the viewers out there because I know that some of you probably still have that mindset, and that's where you get destroyed. You get destroyed if you go, oh, it has to do this. No, it doesn't have to do anything. It simply does whatever the hell it wants to do, regardless of this.
Yeah, I mean, the markets are going to move wherever the big institutions wanted to move. So same thing here on crude oil. Remember, I'm looking for that three-prong move. So in this case, it was 1045, 1050, 1055. Those 5-minute candles, 3 of them. And once again, I set up for a breakout to the upside or to the downside. Now this time, you'll notice I put in these little purple or pinkish lines. Mm-hmm. They were for the 35-tick move, which is the average move that we get when it comes to the news. So I expected 35 ticks up or 35 ticks down. Which way? I didn't care. Again, I'm ready on both directions. So when the news actually came out, we broke to the downside. I was actually in on the short. Notice we stalled just shy of 35 ticks. Once again, as soon as I start seeing some tail there on the candle where we're pulling back, we lose our momentum, I exit the trade. So I was able to capture, as you saw when I showed the profit here on the crude oil, it was $230 on that move to the downside that I captured. Mm-hmm. So I still have a position in on gold. I got to check that in a little bit. But yeah, the news, again, I didn't care what it was. It actually did go to the 35 ticks, so I got out a little prematurely, but that was fine. I still made a profit. I'm not going to care about that. And it never came all the way back. As you can see, the knee-jerk reaction just did a little pause here in this case, and then continued. Yeah. So you would think that there should have been a huge amount of supply for this, right? Well, let's take a look. Because again, I don't know what the news was. I forgot to check it. Oh, there was.
For crude oil, yeah.
Crude oil inventories, 6.1 million versus expected 1.1. So they dumped a huge amount of supply. Now, this one you can cheat a little bit. This is kind of nice. You can get an idea of which way it's likely to go. But again, you got to be careful, like your baited question, do I really care what the news is going to be? Do I know it's going to follow the news? No. Mm-hmm. Because I knew the news was going to be this way. And the reason why I knew the news was likely to be higher than expected was because of another website that we have access to. If you go out to oilprice.com, what you have to realize is that the number we're looking at here on the crude oil inventories is the EIA number. And the EIA number is the Energy Information Administration. It's basically the government number.
Yeah, which is why it's always wrong and screwed up and way off.
Yeah, well, it's delayed a little bit in one way. But oilprice.com, if you go to the breaking news area, they actually, the day before, on usually Tuesdays, and obviously it was Wednesday this week, but if you go back a little bit, where is it now? I got to find it. There it is. October 13th at basically 3:38 Central Time, which is 4:30 Eastern. This was the API number, not the EIA number. The API is the American Petroleum Institute. So it's kind of like non-farm payroll, where on Wednesday you get the ADP numbers, mm-hmm. and then on Friday you get the actual government numbers. So here you can see there was a huge buildup, and that should push down prices. So before the news came out, we already had a bearish bias because we could see that they were expecting 140,000 barrels for the week, and we ended up having where was it here? 5.2 million barrels for the week. So when the news did come out, as you can see, it was a big shock, 6.1 versus 1.1, and prices obviously sunk because of it. But again, I don't care which way the market goes as long as it moves. Now, there is risk in this. There's a huge amount of risk in several ways. I need to make sure that this happened, that you know this. What can happen is a lot of times before the news comes out, you get put in the wrong direction, and you could have slippage on your stop loss. Because if I take this down to, let's say, a tick chart, okay, now we're going down to a tick chart, and I'll take it down to 50 ticks. You can see how quickly this move can actually occur. So if we go back to 11 a.m., oops, as it loads up here a little bit, sorry. Where are we here? There it is, 11 a.m.
Yeah, you're on Pacific. Are you on... You're looking for when that release came out?
Yeah.
I believe that was not quite that early. It was...
no, it was 11 a.m. It was 11 a.m. Eastern today.
Oh, Eastern, yes. Yeah.
Yeah. So it's right here. It just takes a moment for the chart to load. But you can see how quickly this can occur. And if you're on the wrong side, remember, this is a 50-tick chart. A 50 tick chart means every candle of mine is 50 trades. And you can see that it went down and back and forth a little bit. This one would have been okay. So if you were in on the long side by mistake first, you would have been able to get out right here as it went down, and would have been able to get you your stop loss to get out rather than slipping too much. But often this moves down so quickly and so violently that by the time you end up getting out on a stop market, you've already taken a several $100 loss. So trying to trade the breakout is extremely risky, and I don't recommend doing it unless you know what you're doing and you are aware of the risks involved. So there are several different risks involved, and that's why again, I've been doing this for many, many years. I've got a lot of practice with it, and there's still times that things happen. So you just have to be aware of this. It's not going to be perfect. It's not always going to work. I've actually had losses in both directions where sometimes the market just whipsaws back and forth. Mm-hmm. So you got to be very, very careful with using it. But it can work on a lot of different items. For the most part, anytime there's a big news item, I didn't look this morning at the PPI, but yesterday I think we had the CPI numbers come out, and you can look at things like the euro dollar to see if there's an opportunity there. So if I go back, I'm not going to use a tick chart for that, but I'll do a 5-minute here, and we'll go to the euro futures. Actually, we can even use currency.
Sure.
So I'll go euro dollar future currencies. I use the futures primarily, but you can do this on pretty much anything. So we got, let's go to 5-minute. Maybe not that size candle. So here we are this morning. At about 8:30 this morning, it wasn't much of a move, to be honest with you. You can see, once again, the news caused, or prior to the news, the expectation caused some consolidation. And there's your consolidation. We stopped a little bit of a downtrend that we had. We started going sideways. Unfortunately, today's news on the PPI wasn't really a big mover, but you did get that little bit of a wick to the upside and then back. But the big play would really be, as I mentioned, on every Wednesday it's crude oil, and every Thursday it's nat gas, and then, of course, non-farm payroll. So if you go back to the 8th, and here's the other nice thing is that with Forex Factory, I can go back and see, okay, there's non-farm payroll. When was the last one, and what did it do? Mm-hmm. So you can go back in history and see when you missed the number or when you beat the number, how did things, how did it shake out? How did it play out? So you can get a little bit of an expectation as to what to expect, which is kind of nice.
Yeah. Well, for me, it's been challenging over the years because you look at that number that came out, and it's kind of comical. Go back to your economic calendar from Forex Factory.
Oh, sure.
I just love this one. If you guys look at the number for crude oil inventories, and I'm just fascinated by this. Yeah, the one that came out today. You look at the expectation was that we were going to go from 2.3 million barrels to 1.1 million barrels. And if you guys don't know what a barrel looks like, it's a lot of oil. And they were off by 5 million barrels more than thought. I mean, that literally fills the entire, Dallas Cowboys football stadium. Maybe 2 of those stadiums is 5 million barrels of oil. It's like, what the hell is wrong with these inventory people? I want that job. I want to be the guy who estimates crude oil inventories, because you can be wrong and you're making a 6-figure salary. That's awesome.
It's almost as good as the person that puts together the the number that comes out every Friday. The
non-farm payrolls?
No. Every Friday it's the professional ownership. It's the dang it, I can't remember what it's called. It's the CFTC. Oh, Commitment Traders.
Oh, Commitment Traders. Yeah.
Yeah, they basically collect all the data on Tuesday, and they get to release the data on Friday. So when you look at the COT number, it's basically a collection of committed traders. They have 3 days to put together the report, and it's something that could have been done in about 5 minutes. So I want one of these jobs. I mean, they probably get full benefits too.
Oh yeah, and huge figures. So for those we talked about today is trading, commodity trading the news. My big challenge for everybody is this: if you are looking at trading the news and trading commodities, but using the news for it, you got to understand that. To me, it's almost detrimental to you. I think what Brandon was showing here is pretty cool, because he's saying I'm playing both sides of the fence. You can have great news on a commodity and the security, and it tanks. You can have the same news 2 months later and it rallies, right? It's about certain, I guess, environment changes. What's the climate for like right now for that commodity? What's already priced in, and I think that happens all too often is we get influenced by the news too much. And I love a comment here from Margaret. She says, "I used to buy stocks that Jim Cramer was mentioning as buy." Well, to me, that's terrible, right? Because you're basically you're going off of his influence, you're not really looking at the underlier. And then I know you're different now, Margaret. You say you used to, so you probably realize
I wrote an article about that called Kramer versus Kramer back a long time ago, where if you did the opposite of what Kramer says 2 days after he says it, it usually makes money. So if he tells you buy, you short it 2 days later, and you usually get a nice drop.
Yeah, the report I read was something like in the 12 days following his calls, like buy, 100% gave back all the gains. So everything gives back the gains within 12 trading sessions, and that was back in like 2009, 2001 when I got that report. So I'm sure it's changed, but you got to understand he's just creating those pops. It's not necessarily the value or the goodness of a company. It's just his influence on millions of viewers. So I love that one.
Yeah. Well, I was going to share you real quick on the euro dollar since I had mentioned it. Let me see if I can bring up my Skype. Where is it here again? Come on. There it is. Let me go and share the right screen this time, hopefully. Desktop. There it goes. And I should have you guys looking at the euro dollar. And this is what I was talking about, non-farm payroll on the 8th of this month. Again, 8:30 in the morning. This is Eastern. You got a news release coming out. So you do the same thing. Again, I don't care which direction it's going to go as long as I get some volatility here. And in this case, it's a pretty wide zone. You got 115.61, 115.69. Actually, not that wide. But we should get a nice little breakout here. And you can do this on the S&P futures or the euro futures or even the euro currency. And there it is. The news release caused that big spike to the upside that if you had caught this as it was leaving 50, we'll call it 115.70, it wasn't huge, but you had about a 17 pip move to the upside. You could have caught a nice little move there. And of course, it came back right there. There's a knee-jerk reaction, correction, and it actually did the same thing again. This is all within 10 minutes. So you get these very quick moves, and you got to be done with it quickly because you can see the last part, which is normally continuation, has not really been happening much. So you get the knee-jerk reaction. In this case, it bounced and came back up and did it again, then came down. So very violent moves, but a nice little opportunity for you. It's very rare that you're going to get more than 30, 35 ticks, or a $300 move is kind of the average for most of these commodities especially. So, but it's a nice little trick that you can put up your sleeve for the mornings when there's major news coming out.
Yeah, absolutely. Just the risk. I can't emphasize enough the risk management side of it because you get caught on the wrong side of one of those announcements. Fortunately for Brandon and I, we kind of cut our teeth on the old trading floor days where it was high speed. So we're real quick on execution and comfortable with our platforms. Make sure you guys understand your platforms very well because when those things happen, they happen incredibly fast. And if you aren't quick, you can get smoked on those ones. Let's see. I'm going to go back through some viewer questions here. NJ from, let's see. NJ, what'd you say? He says, please, Brandon and Merlin, provide input on Macy's. Oh, boy. So we looked at Macy's the other day on the show, and I will bring it up here. I'll share my screen with the viewers. So here's Macy's, and I'll throw it onto a daily. And the reason is he bought puts. He bought the 2250 strikes expiring January. So the good news is you've got time, right? It's October. You've got a few months. So you have time on your side. You're not going to get hurt too much on time decay. But I'll put the lines on the chart here so we can kind of view what those ones are. I think we talked about this one the other day, and I actually said I like Macy's chart, even though it's retailers, and I think that they're kind of garbage. Look, they're trending up. When you look at all the other retailers, they were performing the best. So I kind of surprised you shorted that one. But what's your take on the Macy's chart right now, Brandon?
Well, I actually kind of tie in another question here. Noam had asked about the RSI, and I've tied into this question as well. So if I can go ahead and share mine as well.
Of course you can.
Of course I can, yeah. Anyway,
sharing is caring on this show.
Well, I'll pretend I care. Anyway, so looking at Macy's, first I got it on a weekly chart, and you're in an uptrend. The only reason why you would ever short in an uptrend is if you're coming up to a major supply zone on a higher time frame. And looking at the weekly chart, I don't see anything nearby. The only thing that might be close is, let's see here, where's my tool? Is right here. You got kind of a rally-based drop right there, but that's not even a great zone, and that's up at 27.94. You're still looking at several dollars away for that. So the thing that I'm seeing right now is that this is a very bullish security. We have a small sign of weakness that's going on right now where you've got what's called a negative divergence. So I use RSI as a momentum indicator rather than using it as an oscillator. Most people look at oscillators and see that things are overbought and thinking they're going to start dropping afterwards. To me, no, if you're overbought, you're likely to keep going. That's called a trend. But what I do see here on the weekly chart is what we call divergence. And the numbers I'm using, by the way, for my overbought, oversold are 60 and 40. They work better than 70-30. Okay, again, I'm looking for this for momentum, not for an oscillator, which is a completely different use. But what I'm seeing here is when we make this second high, we don't have the same momentum as we did before. We have less. Well, when you think about it, for a trend to continue, you should have more momentum, not less. And we're seeing less bullish momentum here. So that's why we pulled back the way we did. But this is not telling you it's going to reverse. This is just simply a correction. And you see the same thing on the daily chart too. So I hate to say it, but those puts, that's not a great idea right now. But here's why. When we pull back, in order for the markets to drop and become bearish, we need to go below 40, or at least have a rally that can't get us above 60, and we don't have that. All we have is a negative divergence here again, where we made a high on less momentum. That just simply means that price is looking to take a break, and it's going to do exactly what it did before, right here. Now, this one didn't have a divergence, but you pulled back. And when you pulled back, you put in a pivot low right there. That's a pivot low because you have a low surrounded by higher low and higher high. When you read the RSI, we're barely at 50. That's still in bullish territory. That means we're likely to go make new highs on the next move up. What you'll notice typically is that when you make a move upwards, like here, we started at a low and started making a move up. Here, we made a move up. What's the difference between those two? It's where the RSI was located. When the RSI is above 40 and you start making moves up, you will make a new high. And you see right there, we made a new high immediately. But right here, what happened? We started to move up and the RSI was below 40. Do we make a new high? The answer is no. We pulled back, made another pivot low right there. Now on that pivot low, notice we're not below 40, are we? And since we were not below 40, we made a new high. The reason why I bring that up is, look at where we are right now. We made this pivot low right here. We are not below 40. Therefore, the next move up should take us to new highs. So I'm sorry to say it, but Macy's looks like it's got room to grow to the upside. It's $27, $27.50. I can see it happening.
You know, it's tough because, and I agree, Big Eb says clothing retailers are down 50+% on normal inventory levels right now. It's going to be ugly. And I agree. I think this holiday season is going to be an absolute shit show. I think that the whole shipping issue is going to be a mess. But for whatever reason, it's kind of like trading the news and putting our opinions on it. If I look at that price chart of Macy's, you know, my gut tells me Macy's is going to dump. Macy's is going to eat it. Yeah, you know, your puts would do great in that scenario. But if we strip out the price, the name of the company here, and just look at the price, which is what we should be trading, it actually says it looks okay and actually looks somewhat bullish. So this is the tough part, is separating your emotions and your opinions about news or the state of a specific market segment like retailers and electronics right now going into the holiday season. I tell you, I'm right there with you, NJ. I strongly believe we're going to see an ugly Christmas, but I can't let that make me force myself into negative trades or put trades when the market's just not doing it. And, you know, my puts I close out today, I got greedy. I should have closed them out last week, and I paid for that, but that's fine. I got to just jump ship when you know you're wrong. So put a number on that and say, here's how much I'm willing to lose on these. You do have time. Now, on and one more thing is never... And this is in my trading plan. You never, ever, under any circumstances, ever short a retail company going into Christmas. Don't do it. It's the biggest loss I've ever taken was Best Buy shorting. I bought third week of December puts in 2000. I don't know, was it 13, 14, something like that? It was a $100,000 loss for me. And ironically, it did nothing but go up. And then as soon as they reported earnings in January, it dropped 50% overnight. And if I just bought the January puts, I would have done a lot better. But careful shorting anything going into the holidays, guys. It can be very dangerous.
Yeah, historically, the stock market as a whole, especially retailers, the three best months for investing is typically going to be November, December, January. That's where you get the biggest boost in the markets, especially after the October debacle that usually happens.
Yeah.
So not surprised there. I mean, you can apply these same techniques, by the way, to the broad market. If I go back to the charts again, And again, kind of getting back on that RSI, I teach this a lot, like I mentioned in my courses I do with the E-mini think tank. And if you have questions about that, you can contact me too to be able to join. But the same thing, we look at the S&P 500 here on the weekly chart, and this is still a bullish trend. So the market pulled back, big deal. All we had was just a little pullback. We still have plenty of bullish momentum going forward. If you take a look at the daily chart, now we have a little bit of a different picture, because if we go back into August, going to September, we started seeing divergence once again where prices were making new highs, but we didn't have the momentum to carry us to those highs. You can see we started losing momentum. So I expected a pullback. Sure enough, we got a pullback. And when we pulled back, we tried to make a little high right here. And this was kind of the undoing of the market, if you will, where we made that little peak, and we did that from below 60. So that's kind of the line in the sand. If you basically in bull markets, you can see it. The RSI in a bull market does not go below 40. This whole bull market doesn't go below 40. So if you can get a high that doesn't go above 60, that's your first sign of weakness. So is the divergence. So really, this was confirming we were going to make fresh lows. So that told me that the low that we had back here was going to be taken out at 4,300. And that's because we made a high and could not get above 60. So what happened? Well, as we can see, going forward here, whoops, went back too far. We took it out right there. And then we made another high. And with this high, yet again, we can't get above 60. So that was telling me we're likely to see some fresh lows coming in the price. And we made a fresh low. Now, as we're making those lows, we did the opposite. Instead of making new lows with more momentum, as this is moving down, what's happening? We're getting less bearish momentum. And since we're getting less bearish momentum, now prices started to push up. Right here, what day was this? That was yesterday. So yesterday, what did the market do? It tried to put in this low right here. Whoops, wrong key. It tried to put in a low, and it wasn't confirmed until this morning. When we opened this morning with the gap up, it confirmed all this, because we just put in a low and the RSI was not below 40. Remember, if you make a low that's not below 40, you should make new highs. And there we are taking out these highs. Technically, we are back in an uptrend because we have higher low, higher high, and we're resuming our move up. Now, the key will be if we can break above 60. If we don't put in a top, and by the way, we should take out this high soon too, maybe tomorrow or the next day. But this is the daily of the S&P 500. It is now moving back into bullish territory, getting ready to climb. Yeah. So the big key will be if we can get above 60, then we'll probably take out these prior highs, and we can see 46, 4,700 before year end.
Yeah, surprising, but hey, it is what it is. Yeah, you guys were asking about his settings. It's a 60-40 on RSI. He's using 14 periods, so keeping that standard, but modifying the range from 70-30 to 60-40. How does Brandon get into IPOs like the one he feels prosperous about? Are you an IPO guy? You get in on those bad boys?
No, I don't trade stock. I haven't traded stock in like 13, 14 years. I like leverage, so I'll use options if anything. And IPOs, I mean, you've talked about them before. They pretty much, they gap and crap. They just get, they pop up off the open and then they drop for a while. And then, of course, you get the lockdown period that expires and then drops again. If I'm ever going to buy an IPO, it's going to be after the lockup period ends and all the selling pressure's done. So, no, I don't touch IPOs.
I don't either. Plus, bottom line is we won't get in on those. I mean, Brandon and I are traders, but we're not, Wall Street, elites that are going to have access to all that crap beforehand. So, bottom line is it works in a couple different phases for those who want to know how IPOs work. If I'm the underwriter, I'll call myself Goldman Sachs because I feel glamorous today. If I'm Goldman Sachs and I'm the underwriter for XYZ Corporation and demand is so high, I'm keeping 100% of it for myself. If it's kind of okay demand, I'll go out to my buddy Brandon who works at Merrill Lynch and be like, hey, I want to buy some, and I'll parse it out to my buddies to reduce risk. If it's still not really selling, I do what's called a road show, and I go around and I try to promote it to different regional banks and brokerages so they call up their clients. And if you get a phone call from somebody like me going, hi, this is Merlin Rothfield of Goldman Sachs. We got a great deal for you on some IPO shares. Run. Because you're the one that's left holding the bag. Nobody else would have bought that crap. So that's how IPOs work. Walter, what's the lockup period? A lot of times it's specifically written depending on the IPO. 30 days, 60 days, or 90 days 90 days is generally the lockup period where they cannot sell their shares, and you can also go short those ones. So, all right, what else you got? I know you said you got some new stuff going on, and people are asking if he teaches for OTA. Yes, he teaches for OTA. He teaches for wealth builders. He's got stuff all over the place. He's an education socialite.
Yeah. Yeah, dude, I got an XLT tomorrow morning. I actually have a new thing I'm going to be releasing too. It's kind of exciting. I could talk about that real quick. Let me just see. I can share this. If I can share it.
Sure.
Come on. My computer locked up, so it may not. Oh, there it goes. Basically, I'm starting this new program that's going to be coming out later this month, and it's called SPX Cash Flow Secrets. So basically what I'm going to be doing is sharing with people. It's going to be kind of a multifaceted service where there's going to be some videos that'll have education. And then what I'm going to be doing is 3 times a week, I'm actually going to be sharing numbers for trade ideas on options where I actually do 0 days till expiration options on the S&P 500 for cash flow.
Nice.
So it'll be a three trades a week. And if you let the options expire worthless, then you don't have to worry about qualifying for pattern day trading. And therefore you can do it with a smaller account. And we're dealing with the SPX options, which also gets taxed as like a 1256 contract like futures do, so you're paying less in taxes on your profits. Make sure you consult a professional for tax and stuff like that. I'm just a layman for that. But I'm kind of excited. I'm going to be releasing that later this month, hopefully. And like I said, basically it'll be a lot of education online with some videos, and we'll meet live a couple times, maybe once a month. But typically it's going to be SMS service where you'll get a message during the day on Monday, Wednesdays, and Fridays where to place the orders for the Iron Condor to be able to take advantage of expiration on that same day and generate cash flow using options.
Nice.
So that's coming up.
You've always got something going on. He's always busy.
Yeah, trying to keep busy.
Nice. Let's see. Were there any last minute pieces here? I know we're running out of the end. IPOs, retailers receipts. There was one that was asking about trendline breaks, which I thought might have been an interesting one. Where was that one, Margaret?
She was asking if you use trendline breaks on the RSI.
Yep.
And I answered, actually, yeah. I not only use trendline breaks on the RSI, which, by the way, all the things you can apply to price, like trend lines or patterns like head and shoulders, you can apply those to the indicators as well. And it's not just the RSI. I just happen to use that one. But you can apply I've seen head and shoulders, double tops, double bottoms work on the indicators that translate into movement on price as well. Mm-hmm. So that's something that you can definitely do, and I have followed that quite a bit. I didn't mention it, but it looks like the S&P index might actually be in an inverted head and shoulders getting ready to break to the upside, by the way.
Oh, the old inverted head and shoulders, huh?
Yeah, and that's correlating with the trend line break on the RSI as well. So I guess I should probably share my
now that you let that cat out of the bag. Boy, we're all clear, ready to wrap up, and boom, here we go. Did Big Eb contact you to try to drag the show out to an hour? That's what he does. He contacts people to stretch this out to an hour.
Oh, stretch it out so we talk too much? Oh, okay.
Yep. Right at the last second, he'll be like, hey, can you answer this question for me? Yeah, there we go.
Yeah, well, anyway, like I was saying right here, you got 2 things going on. You got a possible inverted head and shoulders right there. Let's do it real quick. Left shoulder, head, right shoulder. And at the same time, you're breaking the trend on the RSI. That's correlating with the breakout that we're seeing to the new highs, which changed the trend to the upside. So, yeah, I use all this as far as helping me with making some decisions. You even had, I guess you could say, you had kind of a double bottom right here on the index, the RSI, leading to the pop in price as well. So, yeah, you can definitely apply the same type of chart reading to your index alone, and it'll translate to things moving in price itself. So the answer to that one is yes.
So
thank you, PBJ. Love the art.
Yeah. So if I was to play a sound effect, it would probably sound something like there. That's Brandon's thought on the market right now.
I didn't hear it.
Oh, I'm over here playing bull sound effects in the background because I'm a dork and that's what I do. All right, man. Well, hey, thank you for coming on. I'm sorry it's been so long. Maybe we'll try to get you back on to a once-a-month regular thing. It's always fun having you on and sharing your style and input on trading news with commodities or just news, period. So we appreciate it.
Yeah. We can take a look at the broad markets together. And, again, I tweet quite a bit. So if you guys want to follow me on Twitter, I'm at TraderBW. And I put out tweets pretty much every day on different markets.
Yep. He's very busy out there. All right, Brandon, thank you so much. Good luck with the art sale. Appreciate it. And I'll talk to you soon, my friend.
All right. Thanks, Merlin.
All right, take care. Guys, that was Brandon B-Dub Wendell. You can find him at Trader B-Dub on Twitter. Find out more information about any of his art projects or trading. He's got stuff going on all the time. He's one of those guys that just doesn't sit still. He's always got something going on at some place. So glad to have him on the program. Hope you guys enjoyed that one today. Also seeing a little bit of how he draws things out and zones and levels. It's always nice to see how different people have different perspectives on markets. So let me go into some stuff for today. We already covered the pieces of the market that I was going to get into, which was what happened today from an economic perspective. I'll real briefly cover this one here because we had PPI numbers today, which, remember, we had CPI, slight increase yesterday, and I said either PPI is going to drop or it'll stay the same. We're going to see CPI increase next month. But in this case, PPI actually dropped a little bit, which is good because now it's coming to an equilibrium and kind of meeting up with the CPI numbers that came out yesterday. So that was an important one for me news-wise. I love the discussion with natural gas, and you see the inventory numbers were just appalling for natural gas as well as for crude oil. It was just really crazy the way those numbers came out and seeing some of those not predictable moves, but anticipatory moves. Earnings-wise, this is what really made me want to dump my my puts today. Look at all these banks just killing it today. Bank of America, they blew out by 19% on their earnings. Citigroup was up 30% on their earnings. Wells Fargo, 13.5%. You had Morgan Stanley beating by 20%. So it was just kind of an ugly day all around. Bailed on it. Almost everything here just crushed earnings except the Progressive Group. So the only one that didn't do well on earnings, they missed by 57% on earnings and were just slightly down on the day. Now for tomorrow. No, there we already covered that one. I already covered those two yesterday. This is what we have cooking for tomorrow. There is still big news out for tomorrow at 5:30 Pacific time. So 1 hour before the market opens, you can see we have two pieces of news which I think are very important for the U.S. Number one is that retail sales number. Previous number was 0.7%. They're expecting a negative 0.2%. Now, what's interesting is they are constantly lowering their expectations. They always seem to be dropping and creating very low forecasts, so it's easy for us to jump over those. So just based off what we saw with Brandon and also with the news here today, it would not surprise me to see that they set that retail sales number exceptionally low, which as you guys can see, I'll highlight it for you, exceptionally low right here at 0.2%. And will probably come out as something slightly positive, like 0.1% or 0.2%, and all of a sudden the markets will just rip up based off that as well. So it's the MO of the market, which is set expectations so low that if you come out with any number, it's going to be a positive impact. Like my buddies said, that's like his dating life years ago. He would set his expectations so low, so if he got any phone number, it was a victory regardless. So that's what we happen with economic data out there. Now, last piece is for tomorrow. Goldman Sachs was supposed to report on Wednesday. They bumped it to now Friday, which is tomorrow. You've got Goldman Sachs, Charles Schwab, PNC Financial, and JB Hunt Transportation reporting earnings tomorrow. And that, my friends, is pretty much all we got to talk about today. All right, tomorrow is Friday. For those that I wanted to go into some crypto stuff, but you know what? I saved that for the CIL environment. For those that were in there, we had a great discussion on Polkadot, which had at one point was up almost 30% last night off of some news from their conference, which was great. But a lot of nice moves in crypto today too. You saw Ethereum have a nice rally. You saw Bitcoin. This might be the next big leg up here with regards to the cryptocurrency space. So for tomorrow, you guys can do me a favor. You can send in things that you would like me to discuss. You can go to TraderMerlin@gmail.com and type in what you want to hear about on tomorrow's show. Send in comments, questions. You can tell me the different securities you want me to analyze. If it's an in-depth analysis, I probably won't get to it because I'm going to be in studio tomorrow recording. I won't have much time to prep for the show, but let me know different topics, and I would gladly cover those on Friday's show, of course, with a glass of whiskey. All right, let's see. You guys are loving the Brandon poster out there, huh? Yeah, it's a pretty nice one. I'm waiting for him to just send me a complimentary one. I don't buy those types of things, Brandon. Right, Brandon? Anyway, that's going to do it for me, everybody. Hope you guys enjoyed Brandon Wendell. You can find him on Twitter at TraderBDub. Until then, be safe. Happy trading. I will see you mañana for our Friday whiskey-laden session of Trader Merlin. Take care. Go San Francisco Giants. Woo!